Okay, thank you very much. So the first session is on near silent trading. So trading has evolved. It used to be a noisy and chaotic environment. Everyone's seen the film, The Wolf on Wall Street, and they've seen pictures of trading pits in the past. But now we're in a silent running situation. Algorithms are running and trades are taking place. Not much noise there. So it's still a very fast-paced environment. And the developer now fits in. But how does a developer fit in? A .NET developer. So first, before we get going, a little bit about me. So I'm Ryder. I am in the digital trading team at Gazprom Marketing Trading. I'm dev team lead here. And prior to GM&T, I've worked at other energy trading companies. I've worked in civil aviation, marketing, and environmental consultancy. And I think it's worth saying that in each role that I've had, I've learnt skills and I've developed my skill set and transferred those skills into each role I've gone subsequently onto. When I joined, I knew nothing about trading, nothing about energy trading, and I'm still learning. Everyone is always on a learning journey. And I think it's important just to be open to learning. So the agenda for this session is a Trading 101. Decision making, developer's approach, strategies, life cycles, pipelines, operational concerns, and a little bit about our deployment philosophy. Okay, so trading. What is trading? Trading is buying, it's selling, it's making decisions, it's looking at trading signals. It's taking a position on the market. It's accepting risk. It's making and losing money, which I've already said, but it's very important. Okay, trading is a zero-sum game. I win, you lose. Sometimes I lose. Don't like that, but it does happen. You know, it's about the risk. We'd like to win more frequently. And to win more frequently, we need to make good decisions. Good decisions make money. They make profit. Bad decisions lose money. Okay? So, there are lots of decisions that can be made. In everyday life, we make decisions all the time. And in trading, it's no different. So if we can make more good decisions more frequently, we have the opportunity to make more money. Okay? So how do we do that? Options. 1, increase utilization, capacity utilization. In the trading world, ask existing traders to trade more frequently. What does that mean? Okay, let's put it in our context. Someone wants us to write more code. Okay, just go and write more lines of code. You work harder. It's not really feasible. What happens is we introduce bugs into our software. We go through a refactoring cycle. Our delivery slows down. Okay? In a trading environment, we'll probably lose out on the trades more frequently, and in every environment, we will burn out. And that's obviously not a healthy environment to work in. So let's look at another option. Let's scale out. So let's hire more traders, or for us, hire more developers. Okay, so yeah, proven. Lots of people do it, lots of organizations do it. But actually, does it change anything? Do we make more decisions? Well, not really. Per person, we're not making any more decisions. We're just having more people make decisions for us. So it's linear growth, okay? The decision-making process is unchanged. Okay, so option 1 and option 2. Do we gain a competitive advantage by taking those options? Option 1, well, that's kind of like asking somebody to push a block harder. Yeah, just put more effort in, push it harder. Option 2, we'll get more people to push blocks. But we're not actually doing anything different, are we? We're just doing the same thing. We're not that person with a round ball. That person with the round ball is putting the same effort in, but it's moving faster, moving further, moving quicker. So, the big question, can we make timely, good decisions more frequently and trade off the back of them? What we need is a third option. Is there a third option? So to look at that option, or find that option, discover that option, we need to look at decisions, types of decisions. So there are some decisions which are simple decisions. There are some decisions which are complex decisions. And in fact, before you get to the decision point, you need to know, is there a decision to be made? Okay, so firstly, if we look at the decision-making process, identify the decision. Okay, don't invent something for the sake of it. Is there a decision to be made? Actually, don't write code for the sake of it either. Step 2, gather relevant information. Okay, weigh the evidence. Okay, and then with all the information at hand, with the analysis completed, you can then take action. So, this step 2 and step 3 is what we look at in the digital trading team as a signal. Okay? To support a decision, we look for signals. We take in data and we weigh the evidence. At the end of it, we generate a signal. Okay? So simple decisions may require few signals, or even simple signals. Okay. Complex decisions may require many signals, or a complex signal. Okay? Today was a very sunny day. One of the signals is like, if it's sunny, do I take my sunglasses? You know, it's a simple thing. But actually, it's a bit more difficult than that. You might be in a basement and not know what it's like outside. So, a trading signal. A trading signal is a trigger for action. Okay? In the trading sense, it's either to buy or sell a security or an asset, and it's generated by analysis. Okay? So the analysis can be human-generated using technical indicators, or generated using mathematical algorithms based on market action. Okay. There we go. So the trading signal. Weather data is actually a very useful source of information in trading. It allows us to generate signals. Quick mention, it's easy to make a decision in retrospect. A decision has to be made on a timely basis. What this means is, if it was sunny today, this afternoon, it's probably a nice time to have an ice cream. But this evening, is it the right time for an ice cream? If it took you 6 hours to decide to have an ice cream, you probably wouldn't enjoy it so much. In the trading world, the opportunity to make money only exists for possibly less than 1 second. Okay? After that, it's gone, never to come back. So let's go back. Requirements. We consume data, we analyze data, generate signals, make decisions. We do this continuously. This sounds very much like something that we do every day. We write applications that do this. We developers do this every day. Could be any application, but we're going to use it in the trading environment. Trading requires quite a lot of knowledge, okay? And we're learning all the time. but we have to collaborate with traders. Traders have built up years' worth of domain experience. They've got market experience, they've got domain experience, and much like we've got technical experience. Okay, we've got technical expertise. We can cut code. If they look at our screens, they won't understand what our code's doing. If we look at their screens, we won't understand what's on their screen either. But together, we can collaborate, and actually, we can do some pretty darn good things. Actually, just jumping back, we don't speak the same language. Okay, so that's one of the challenges. We don't speak the same language. So everyone's on a journey. And it's also a journey on understanding that traders are driven by profit and loss. Okay? We're measured more on stability, correctness. Have we met the requirements? A trader doesn't care about requirements, he cares about the money. Okay? So you have to have some interesting conversations about priorities. They will always go after the money. Okay, so trades. We've talked about trades. We can take in data, we can analyze the data. But trading is actually very complex. There's many different flavors of trading. There are many different football teams. Okay? So not every type of trading is a good fit for automation. Okay? So we've got, and for example, there are lots and lots of different types of trading. Discretionary, or otherwise known as speculative trading. It's quite a human type of trading. If you're sat at a football game, watching the game, you may have an emotional connection to one of the teams playing. Okay? You may have seen that the striker has got the measure of a defender. Okay? You may think that the striker's got a good opportunity to score a goal. Okay? So none of the statistics may back that up, but you can see it. You're using your experience, you're analyzing the game as it's happening, and you can see there's good opportunity for that goal to happen. Okay? That isn't a good fit. It's human-based, it's conversation-based, and in the trading world, it's stepping outside of the immediate market, looking at news, looking at having conversations with other traders, looking at other investors. Systematic trading, though, is a different type of trading. It uses statistics. So before a football match starts, you can look at the statistics of a game. You can actually generate statistics of the game whilst the game is being played. What is the pass rate? Okay, how many opportunities, how many corners have they had? How many shots on goal have they had? Okay, it's more statistical and it's a good fit for automation. So systematic trading applies if this, then that. Very simple. One of the things I have at home is if I open the front door, the light comes on. So if I open the front door, then the light comes on. Very, very straightforward. If it's raining outside, then I will take an umbrella. Or in a trading world, you might say, if it gets unexpectedly cold, then the day-ahead price of gas will go up. So let's examine this conditional statement. We're quite used to if this, then that in our code. Okay, so is it simple? If it gets unexpectedly cold, well, where will it get cold? Is it localized or is it widespread? Is it just St. Petersburg that's going to get cold? Or is it St. Petersburg and all of Europe? What time of year is it? Is it spring? Is it the middle of the winter? What is meant by unexpectedly cold? Okay. Let's jump across. Then the day ahead price of gas will go up. What is today's? What's the current within day price? Okay. What is the price curve? Okay. So the price curve being today's price, tomorrow's price, the price after that, and so on and so forth, okay? What is gas going to cost you next year? Okay. Has the market already priced in the cold weather, okay? And do you really care about this? Because are we in a position to trade? Okay. So actually, this is quite a complex statement. It's very hard to solve. So we could spend lots of effort and time to figure out this, but is it worth it? Is it worth the reward? Okay. So not every statement is a good candidate for a trading strategy. Okay, a realistic example. Okay. So if it is economically viable, then we can trade gas around the pipeline. So gas is produced in one location, many locations in Russia. The gas is flowed through pipes to other countries. Okay? So we're buying gas in one place and we're selling it somewhere else. Okay? Now, to transport gas costs money. To flow gas costs money. It's a very well understood cost. There are formula published for it on the interconnector websites, so it's completely open. And what we can see here is that we've got the price going up and down. So, and you don't have to trade. If it's not economically viable, you don't trade. So it's something that's very, very well understood today. So what we might have, let's going to jump onto the life cycle. We might have an idea. Everything starts with an idea. The idea needs to be discussed and prioritized. Okay? Once it's prioritized, we may, I've got some flashy animations. We have the idea, and then what we do is we evaluate the idea. Okay? Prototype it. Okay? To get to that evaluate stage takes a number of people. It takes developers to get data. It takes traders and analysts to do the evaluation. Quite often, we're loading years' worth of historic data. We may not have that data already, so we might have to go out to find it. We might have to go and ask someone to scrape it from a website if they can get hold of it. We might have to pay for that data. Typically, the traders or the analysts will use Jupyter Hub, and they may iterate through and do some analysis using the Python code. Okay? Doing it quickly. Primary principle is failing fast. Okay? So if we can evaluate, we get to see if there is a signal that's being generated. Okay? So if there is no signal, there's no correlation, then we think, okay, this doesn't work, bin it. Stop what you're doing. If it has potential, but it's not quite right, go back through. Why is it not right? Think about it, have the idea, have the discussions, prioritize it, reevaluate it. But once it gets past the I've got a strong signal stage, then it's time to develop the strategy. The strategies that we develop are in C#. So notice Python to start with, quick iterations, quick change, quick analysis. C#, quicker execution, quicker than Python. And then we go into the backtest phase. Now, backtesting is critical because what you're doing is not just using the signal, you're actually generating a strategy. Now, a strategy may have taken a number of signals, okay? So a strategy may be written via composition. So, and what do we use for composition? We use NuGet packages, okay? So we may have a composed strategy which is using many NuGet packages to actually deliver the whole thing. The backtest will tell us if it's profitable. Okay, so when that strategy runs, we'll get a graph out of it and we'll see some numbers, some hard numbers. From 2012 to 2019, if this strategy was running, we would have made £100,000, £200,000. Or it might be we only made, or we may have lost £100,000, okay? You go back, refine, 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 until you release it, and once it's released, you monitor it. Now, the job's never done. Code is never complete. We can always change it. There's always refinements to make. So you'll always end up back at the idea stage. And if there's at any point, the monitoring tells us that a strategy has become unprofitable, it gets turned off until we can find out why it's not profitable. Markets are always moving. They never stay the same. So, talked about developing things in Python and then using .NET and C#. The team I work in operates, we follow the ring theory here, which is the fast ring, slow ring. The fast ring is for your prototyping. It's your canary builds, for example, your research. Your slow ring is more of your stabilization, your maturing. It's adding on the bits and pieces that you need through the fullness of time, okay? Some of it may be monitoring. For example, you may go fast ring, and I'm going to do manual monitoring of my strategy. And if it gets too risky, I'm just going to sit there and I'm going to turn it off, okay? It's supervised automation, if you know what I mean there. Someone's sitting down and watching it run just in case. Once you get into a slow ring, you've added on the monitoring, adding on all of the safeguards and the rails, which you need to lead so you can run the strategy unsupervised. So our platform looks at data ingestion, it has a decision engine, and it has an execution platform. This whole pipeline needs to run in between 0.1 of a second and maybe up to 4 seconds. So we're consuming so much data from the markets, you can't stick it in SQL Server, for example. If you can stick it in SQL Server, you've got a table there, you maybe get a day's worth of data. So things move really quickly. Hundreds and thousands of trades happen per second. Your strategies have to be running and ingesting that data. The signals have to be running. The decision engine has to be running so you can actually execute in a timely fashion. So our data pipeline, we take data from various sources, okay? Some of it's internal to Gazprom Marketing Trading. Some of it's market data, like Bloomberg, for example. We receive the data, and we typically, in our team, at the moment, we're using RabbitMQ. Okay? So, and once we've received it, it's basically coming in a bit like Internet of Things, basically, streaming in all the time. We process that data in a C# service application, basically taking it from the Rabbit queue and stuffing it into a store. The store that we use is a time series database. Okay? There are quite a few around. And what this allows us to do is it allows us to continuously be reading the latest record. Very important. You can't use something like SQL Server for this. It has to be a time series database. So the data that we receive is always different. Our time series database is receiving data, well, we're receiving data onto the queue, which may be in YAML, XML, CSV, JSON, and it's happening continuously, or in some cases, we may only get one message a day, but sometimes we might be getting messages multiple times a second. But the data itself, price data, FX data, flow data, outage data, weather data, economic data, calendar data, sentiment data, it's always of a different shape. If we've already got it, then we're not going to be writing another one to bring it into time series. So the only thing that is consistent is inconsistency. Everyone has to adapt. We have to be changing all of the time. So what we do is we write single responsibility applications, small applications that do one thing, a class that does one thing, a method that does one thing. Okay? We like to be able to reuse our code, okay? Because everything around this is always changing. So we've looked at receiving the data, but actually what do we do with this data? Well, we've got an execution platform. Okay? So we've got the time series database there on the left, containing all the data streams, and we have hundreds possibly of those. And it gets passed in, it gets read by a composite strategy, a composite C# strategy. Okay? And that strategy, as I said, is making decisions about when to trade or not to trade. When it decides there is an opportunity to trade, it gets passed on to the execution platform. We're reusing our own code. Okay? Execution platform, all it does is execute orders or execute those trades. The composite strategy discovers those trades. Okay? So once it goes to the execution platform, hits the external market. It's out there. We're either going to make money or lose money. Okay? So the composite strategy and the execution platform is known as a complex execution platform. It has to be performant. We use a third-party platform to do that, and we write modules that are hosted and executed by that platform. It has to be exceptionally performant. So as I mentioned, we're receiving thousands of messages per second from different sources. Okay. In addition, we have actually got an Angular website, which we run over the top just to allow some management. And we also do some capturing of information about the strategies, about their performance in a SQL Server database. How aggressive is that strategy? Things like that. So a strategy is running, may be running, but it needs to recognize some things about the market. Trends. This is a price graph, okay? So we have an uptrend, downtrend, and sideways trend. You see these a lot on trader desktops, okay? And we also see a lot of these things called Candlesticks and Dojis, okay? Now, this is the trader's language, okay? I'm learning this. I'm not a trader. I'm a developer. But I'm working with traders, so I'm learning their language. And also, the programs that we're writing, the applications we're writing, need to work in their language, okay? So these candlesticks are basically an opening price, a high price, a low price, and a closing price. 4 prices. Not that complex, really. But you may have yesterday's price, yesterday's candlestick, and today's candlestick, okay? And these are really useful. Now, unfortunately, this is the only bit of code I can show you tonight. And this is for a within-day Doji. And what this says is basically is the price today within yesterday's price? Are we having a narrowing of bands? So this, you can see it goes from very big. Yesterday was a very wide range. Today, it's a small range of price, okay? So in this case, it's actually a buy and a sell signal. It just means you can do both, okay? This gets reused a lot, and it's very, very well known. So it gets graphed out onto the trader's screens, and you can see here we've got the candlesticks at the top, and it's the market price, okay? The application is continuously generating candlesticks. When we're running the strategy, we don't generate the UI, but our strategy is doing it for us. We have to write the code to generate these candlesticks, okay? The bit at the bottom is market activity, okay? How liquid, how many people are actually trading at a given point in time? And the important thing for a trader is the middle bit, the profit and loss. So what we can see on this, and this is generated from a back test, is that as the price is downward trending, our P&L, our profit, is going up. But as soon as we have a sideways trend, we start losing money. That's not great. And then at the end, it's going up again. The price is going up. Oh, and we start making money again. So what this says is this strategy needs some work. We're making money, but when there's some instability or sideways trending, we're losing money. It's not a great strategy at the moment. So a strategy that's running is always following the market. The market is always moving. There's a few concerns about that. When we're a person will generally notice when something hasn't happened. But an application doesn't. It doesn't notice these things. So, is the data fresh? How do you know when you last received data? Well, we generally, as a people, will know. We'll see, oh, the price hasn't changed for a while. An application won't know that. Okay? So an application can't run as expected. It's probably making bad decisions because it's got old data. That ice cream would have been better to probably eat when it was in one piece, not dripping down your fingers. So it's this daytime, nighttime scenario. How do you know it's daytime? Well, you look outside. But if you're in a room, in a basement, and you're looking out, you've got four walls around you. It could be nighttime, it could be daytime. You've no idea. And that's essentially what's happening with the strategy. It's running blind. You're trusting it, but it's running blind. So we have to monitor it, okay? Because we can't really trade on yesterday's data. You don't know what you're doing. So we have lots of monitoring on our strategies. We're using Serilog to write log information. We're piping it out into Elastic. We're using beats. And the old faithful, sending out emails. Emails are actually exceptionally useful, even though you can generate too many of them. Our applications are running in what we call as a core and satellite fashion. The core applications are the strategies. They sit very, very close to time-based. They're pulling data out of time-based, out of the time series database as it arrives. The satellite applications are the loaders, okay? So jumping back, the core applications are the ones which interact with the third party's vendor platform, okay? We have some control over that. We can write C# modules that link in and fit in, but there is some constraints. There are some constraints with that platform. But with the satellite applications around the edge, we can do what we like. And we can use .NET Core, .NET Framework. We can use the tool that's right, okay? We don't just use a tool because it's there. We use a tool that's right for the job. So we've got the loaders, the monitors, the UIs, and the APIs, the satellite applications, and they can be put onto different servers, whereas the alpha strategies probably live much closer to the data itself. So, near silent trading. Why is it near silent? Okay. The algorithms that are running, yeah, they're silent, but actually, there's a lot of conversation, and a lot of work, a lot of collaboration to get to those silent running algorithms. And a recap on our tech stack is quite varied. So, yep, we've got the NuGet packages, we've got the .NET Core, we've got the C#. As I said, we use the tool for the right tool for the job. And we also encourage the discovery of tools for the job. We don't just use it because we know it. We use the right thing for the right job. And that is the end. Any questions?
Can we get a mic out?
Okay, sure. Hello, thank you for this very interesting presentation. I'm just curious about quality attributes for the systems that you mentioned before in for architectures that you mentioned, because I see the lot of data you expect, and the lot of data you are pulling to database, and you use RabbitMQ. And that's why I'm just curious about.
Can you say it again, please?
I'm curious about quality attributes that can be considered as architecture significant for this system, because I see RabbitMQ and huge data pressure. That's why I'm very interested. How did you achieve it?
So RabbitMQ isn't the only way we do receive data. There are other proprietary data feeds that also go in to our platform. However, if it's a non-market data feed, which there are many, then typically we take it through Rabbit. Now, it's not perfect. It's definitely not perfect, and it's evolving. I'd love us to be using Kafka and streams. It makes sense. But we're on a journey. Nothing's, like, as I say, we fail fast, we get up and running, we refine, we refactor, we move on. We go for the next challenge, next problem. It's a good question, though.
Okay, thank you. Maybe one more. Okay. One more question about cloud. If I understand correctly, you deployed all the system to on-prem. Am I right?
Yes.
Okay. If I would deploy it to cloud, let's imagine, would you use serverless or something like that?
It would make sense to do so in certain situations. Yes.
Okay. Thank you.
Sure.
Hello, everyone. So we're not traders, actually. We're just developers. That's why our question is just related to developing. So could you explain, please, I'll give an answer to my question. You told that you have huge data, and what kind of approach you're using to calculate all this stuff? I mean, it's definitely some kind of cluster. What kind of cluster do you use? Just
The data is stored within a time series database. It's the one we run is proprietary to the execution platform. It's mostly file-based, but the way it's read is it just read forward. It's not like a normal relational database. So, and the vendor has optimized it. It is very performant.
oh, okay.
Okay. Chris, you can tell them what it is at the break. Just not answer the camera.
Sure. I did use the InfluxDB icon, but it's not. No. But that is that's a good time series DB. Yeah.
Because, you know, I'm a little bit wondering, because you're using SQL Server, but SQL Server is quite slow. Did you see or did you look at maybe NoSQL approach?
Yeah, so the SQL aspect is generally used as a ledger for recording what trades and orders are taking place, and also for performance. It doesn't receive vast quantities of data. And it doesn't receive huge bursts of data either. It's very measured. It's completely handleable by SQL Server. It would be nice in some ways to have more of a Mongo style database where we didn't have to think so much about what the structure of the data would be in the database, because quite often we don't really care. We just the trader will want to output data from the strategy. But at the moment, there is a developer overhead because we have to get involved and shape things for them a bit. And ideally, I think we're more valuable if we're doing other things than shaping data to put into SQL Server.
Thanks for talk. Do you use any actor model systems for your goals, achieve your goals, and your opinion? It would be better to use actor model system, for example, Arcanet.
Yeah, with the platform that we're operating at the moment, we don't have the option of going for the actor model. We could force it if we wanted to. We have a number of teams at the moment running Service Fabric, and you can do it there. So we have applications running with Service Fabric. But in honesty, I don't think Service Fabric is the best solution for us. We can go for other things, but it's in the fullness of time.
Sorry that we hold this microphone. Actually, my friend asking about actor model.
Yes.
Yeah, actor model. And so Service Fabric is not just one thing. You could use, for example, actor.net or something like that, because it's very useful stuff. When you just throw your data and all actors, 1,000 actors just calculate information. That's what just question. Okay, yeah. Thank you.
Okay.
So can you tell the name of the time series database you use?
Not at the moment, no. No, not at the moment until the break. During the break. So the platform we operate is giving us a competitive advantage. So there's a lot of things, many things that I can't say because that would erode the competitive advantage.
So process of processing input data and decision making are running asynchronously. So on the picture it was like you gathering data,
Yep.
processing and writing to time series database, and then decision making takes that node and
To be honest, it just depends on how it's been coded. So if you want to use tasks and you can get the responses back and process them asynchronously and recombine it, then that's fine. generally we don't do it because of the version of .NET that aspect of the platform is running, and the people that are the developers that are writing it at the moment are battling generating strategies. So introducing asynchronous may be a step too far, but these things are running very quickly, and each strategy doesn't consume every bit of data that we've got. It's selective, it's focused. So if you've got a couple of threads of data coming in, or a couple of composite signal generations running, then it's not too much of a problem. It's not, you don't really want to go and await something or wait for it to come back, and it needs to run quicker than that.
Thank you.
Thank you for your talk. I just wanted to ask you about the way you store your data in time series databases that you mentioned. So, as I understood, in your calculations, you use the last piece of data, the last snapshot, yeah, always. And so, my question is simple: why do you need to store the other data, other slices, other series of time series?
Backtesting.
Sorry?
Back testing, so the replaying it of the data. So we receive the data, we need to store it because in the future we may write a strategy that needs it. So to prove whether that strategy is a good strategy or not. So we always store data. In a trading environment, you never throw data away. Data it makes you money. You've got to make use of it. Never throw it away.